Welcome back. You're watching us here on Halftime Report. The Nifty is now curtailed its losses from about 100 points to just about 60 points. So we'll keep an eye out on that, the recovery that we're seeing from the lows. The auto stocks, which we were talking about, M&M for one, has moved higher. And Trent is the other one I'm looking at. From its lows, it's seen a big recovery over the last few trading sessions. And remember, the company reports its numbers tomorrow. Was a big cut that we saw as they reported their first quarter update, where the revenues grew just by about 20%. So it's not that the street does not know the revenue growth. The important thing to track now will be the management's outlook on what the performance of the company is likely to be, given the sort of store expansion plans that they have. Some important news at the bottom of your screen. SEBI may end weekly options expiry, introduce bi-monthly and monthly expiry. It may bring out a consultation paper on discouraging options speculation. We'll probably get Yash to talk a little more about that, but the fact that there could be curtailment of weekly options expiry does not bode well for some of these capital market names. So we have BSE for one, which is lower right now. But let's get in. Marico reported a largely in-line set of numbers, good numbers coming in, 9% volume growth, which is the highest in the industry. I caught up with the MD, CEO, Saugata Gupta, and spoke about the important aspect of the raw material inflation and margins. Let's hear him out.
The worst is over. In the last 2 weeks, it has come out from around 11 to 12% from the peak. Also, you must realize that we have to balance profitability along with supply chain assurance so that we ensure that we have, during these high inflations, we have enough supplies at the right time, at the right place. Because as you know that we compete with a lot of smaller brands as well as unbranded, where they do have supply chain constraints, and this is an opportunity also to grab market share. So I think things have stabilizing, and therefore we will be able to give a far better view of this in the second half of the year. Having said that, I think we are an extremely resilient brand. If you look at even in the last two inflationary cycles where we have taken significant price increases, we managed to hold on to parachute volumes. I think it's one of the most inelastic in terms of brand, in terms of price inelastic brands. It has a strong equity. And as I said that while during inflationary times, traditionally in terms of supply chain and other, we have significant competitive advantage. So I don't see it as a major concern as such. Yes, there are short-term dips in profitability, but as I said, that if you look at history, 1 year of inflation, it always is followed by a deflation, and therefore we make up as far as profitability is concerned over a 2-year CAGR. And the other thing which is interesting is that if I look at the Marico portfolio now, whether it's in India and international, the dependence on parachute has significantly reduced in terms of delivering to the profit numbers. We now have a significant diversified portfolio, value-added hair oils, the part which has done very well, is a high margin portfolio. So I think things are, the dependency also has significantly reduced compared to even say 5 or 10 years ago.
So is it fair to say, you will get clarity on how much better the margins can be, say, in the next quarter or so, but for now, the margins that you reported in this quarter are likely to not be breached on the lower side. Is that fair to say?
Absolutely. I think, as I said, 1 or 2 quarters, I don't think is a problem. I think things will definitely improve in the second half. And number two, as I alluded to, that as you get into a 2-year CAGR, next year, obviously, there will be a significant catch-up because this will be followed by a deflation. Because what happens is that whenever there is such high, as you know, that coconut has different sets of demands. And whenever these demand streams ration, whenever there is such high inflation.
All right, so let's talk about the good part of your business. It is the revenue growth. You did extremely well. A large part of that obviously was price-led as well, but volume growth of 9% also is the highest in the industry. How much of this is sustainable? You've targeted double-digit revenue growth. Could you be a little more specific about, what range are we looking at and what proportion of that would be volume-led?
If you look at our trend in the last 4 quarters, we have been, sequentially moving up 6, 7, 8, 9. Yeah. And I think in this year, hitting a number, double digit is very much possible. We will attempt to do at least in 1 or 2 quarters. Given the inflation and whatever outlook we have, I think we believe that, and the fact that we are extremely confident of continuing to deliver double digit constant currency growth, and So far, things are stable also on the currency front. As far as the international markets is concerned, there is reason to believe that we should be in the ballparkish 25% revenue growth this year.
25% revenue growth this year with a couple of quarters of double-digit volume growth. The street would really like that. Value added, that's the one. After very long quarters of weakness, it's come back this quarter. Do you think this is sustainable? What is it that you changed for it to improve? How much of that can be attributed to consumer sentiment? And from here on, what's the prognosis on value-added hair oils?
Two things. If you look at the last couple of years, I think we went into a trap of not investing behind the category. As a market leader, it is perhaps our responsibility to invest behind the category and not bother about maintaining share of voice. I think competitive intensity was far more at the bottom of pyramid, and there was a significant movement from ATL to BTL, and we also went into that, which I believe doesn't lead to necessarily category growth and offtake growth. And therefore, what we did was we said that we are okay to sacrifice some volumes at the bottom of pyramid. We are not going to get into the trade game, but convert that resources and transfer that resources into investing behind ATL for brands which are, what I call mid and the premium segment, Secondly, I think what has also helped value-added hair oils and is going to continue to help is our Project Setu. As you know, Project Setu aims to increase our overall direct reach by 500,000 outlets over the next 3 years. And especially in rural or semi-urban, I think what happens is that only core brands are throughputed through wholesale. In our case, it will be Parachute and Shanti Amla. So obviously the second, third and the fourth brand in VAHO, whenever you do direct distribution, there's far more range selling and it gives an opportunity to be sold and made available, and therefore, and when you invest, obviously there's brand preference and switch. So I think that is going to sustain, and therefore we are extremely confident with this strategy of maintaining this double-digit value growth for value-added hair oils. And what is interesting is X of Shanti, which is the bottom of pyramid. I think the volume growth also was in double digits for the other brands, and therefore this is a right step. I believe this is a far more sustainable growth, and also the growth is coming in the high margin component of value-added hair oils.
That's great insight, Saugata. Things are all looking up right now. Are there any risks that you see to growth and any sort of thing that can topple the apple cart? There is a lot of global uncertainty around as well.
See, we are a domestic consumption company and most of the international markets are stable. Obviously, there could be black swans, but I think one of the things we are mindful of is ensuring that we will take every step to maintain Parachute volume growths in the next 1 or 2 quarters when the inflation is high. And that is, we are doing every possible step to do that. I think we firmly believe that we have entered a kind of a virtuous cycle of growth because of all the initiatives we have taken and taking right calls. The diversification strategy is also going well. I think we have to keep on executing well. I think execution is extremely important and stay disciplined in the resource allocation. As you know, one of the things we believe in is that we always believe that we have to drive volume-led top-line growth. Yes, inflation is good for us in some way. The second thing is that we will never manage margins by doing cost management, especially cutting A&P. This is something we have been following steadfastly over the last couple of years, and we'll continue to do that. And I think we have to continue this high level of execution and focus strategy.
Okay, so that's the management of Marico.